Well, we don't expect any policy change from the Fed meeting next week. What we do, I mean, we are closely watching the tone of the monetary policy statement, in particular looking for, the placement of the word, of the phrase, considerable period of time. So basically, no policy change yet. We expect the Fed to start hiking rates by mid next year, but at the same time, the curve will flatten because of the excess savings in the global economy will imply will keep the long end of the curve suppressed. Well, it did. It did impress markets in the beginning, but then as reality seeped in, markets started to seem disillusioned by the whole ECB policy package. But it wasn't really a surprise to us. We have always maintained that the TLTRO take-up will always be inadequate, given that the funding conditionalities are not very generous to begin with. Now, is money printing inevitable? Well, if you mean that will the ECB, but by that if you mean will the ECB be forced to buy sovereign bonds? Yes, it will be, if it is keen, or rather if it is determined to meet its target of expanding the balance sheet by 1 trillion euros. The other option, of course, is that it changes its target. But if it is determined to meet the target, yes, we do expect it to buy sovereign bonds. India is one of the largest beneficiaries of lower oil prices. It benefits the economy through lower trade deficit, through lower inflation, and through lower fiscal deficit because of the subsidies in place. What's more comforting, or rather what's more reassuring, is that the government seized the opportunity of lower global oil prices to deregulate diesel prices, and that's a big. I mean, it shows that the new government is determined to be on the path of reform. But we're hoping that if oil prices increase, these subsidies these deregulation measures are not reversed. So yes, it's a boon for the Indian economy.